Dear all, a very warm welcome to the second Realty Plus Co-Working Summit and Excellence Awards 2021. So let's begin the proceedings of the day with the auspicious Ganesh Mantra.
वक्रतुण्ड महाकाय सूर्यकोटि समप्रभ निर्विघ्नं कुरु मे देव सर्वकार्येषु सर्वदा.
Welcome everyone. I'm Sapna Srivastava, editor Realty Plus magazine, and let me, on that note of positivity, also express our sincere thanks to our partners who helped us put this event together. Let me thank our co-working partner, Simply Work, outreach partner, Qdesq, virtual event partner, Common Vertex, creative partner, Another Idea, business media partner, BW Business World, online media partner, Exchange for Media Group, and of course, the team Realty Plus for organizing this wonderful session on co-working. Friends, before we begin with our very interesting sessions on some very interesting topics, let me give a brief introduction of what Realty Plus is all about, especially for those who are joining us for the very first time. Friends, Realty Plus magazine is part of Exchange for Media and BW Business World Group. The monthly publication is the real estate vertical of the group and was created to cater to the needs of the real estate business. For the past 16 years, Realty Plus has been at the forefront of news and stories influencing the world of real estate. It was also recognized as the best real estate magazine by National Real Estate Development Council NAREDCO and is available in both digital edition and the print edition. Apart from our monthly magazine, the Realty Plus series of collector's edition coffee table books are premium editions launched once in a year, spotlighting prominent personalities, products, and brands of the real estate industry. And in fact, we look forward to also featuring some of the many eminent speakers that we have today in one of our forthcoming Realty Plus coffee table book, which is Realty Plus Super CXOs, India's top 100 realty influencers. It is a coffee table book which features Indian Realty's dynamic super CXOs who are transforming the sector through their leadership and vision. Moving on from the publications, Realty Plus also is, as the challenging times are, is also changing its products in sync with the times. For instance, the Realty Plus Conclave and Excellence Awards, which are held across 7 cities, physically are now being turned into a virtual series. Our virtual series feature eminent speakers, engaging discussions, and lively virtual award ceremonies, which we used to present physically, are now happening on the digital, customized digital platform. And we also felicitate the top performers in the Indian real estate. The virtual series are designed to inspire and engage a larger, more inclusive audience from across sectors, industries, businesses, and regions. As I said, Realty Plus always keeps in sync with the changing times. Realty Plus also produces various online products and events under its recently introduced Realty Plus Digital Connect initiative for the real estate sector, which is spread across online channels that provide high visibility and real-time engagement. Under the umbrella of Realty Plus Digital Connect, we have Realty Plus Masterclass webinars, which feature subject matter experts and industry leaders in an insightful and informative conversation on current and relevant topics. The Realty Plus Real Talk video interviews with influential leaders from varied segments of real estate have them sharing their honest views and opinions and real facts and figures for the benefit of all the stakeholders of the industry. And friends, not to be missed, every morning is the Realty Plus e-newsletter that goes out with the latest news and opinions from across realty sector of India and the world. We are also very strong on the social media platforms, and that is how we stay connected with our readers, peers, and partners and promote our products. This was a brief snippet of what Realty Plus products are, what our latest initiatives are, and in case you need more information, do get in touch with Ms. Tripti Kedia, publisher and business head, and we'll be happy to connect with you and showcase our products and share our latest initiatives with you. So, friend, this was a small introduction of our Realty Plus magazine. We now start with our day's proceedings, with our interesting sessions, with the inaugural address from none other than Dr. Annurag Batra, who is the chairman and editor-in-chief of BW Business World and Exchange for Media Group. And as we all know, he's the media mogul and an expert on various sectors and industries. So can we have the AV, please, from Dr. Annurag Batra sharing his views?
afternoon. Welcome to yet another Realty Plus initiative. Realty Plus is India's leading editorial platform for the last 17 plus years to bring real estate insights, information, and opportunities to you. Today we are discussing the co-working spaces. It's the Realty Plus Co-Working Space Summit and Awards. Co-working places in the last 10 months have morphed into, if I call, smart spaces, flexi spaces, super spaces. Clearly the need to have your workspace close to your home, and even if it's not integrated with your large office, has created an opportunity for co-working spaces. Co-working spaces in the last 10 months have morphed into flexi spaces, super spaces, smart spaces, adjunct spaces, and have really risen to the challenge. They have, as office experience takes on a whole new definition, I think the smart spaces, the super spaces, the flexi spaces, the co-working spaces will also keep pace with it. Today we celebrate the leaders of the co-working or the smart working industry, the flexi working, super spaces working industry. Really, technology has made sure that you can work from anywhere, but the opportunity to be face to face with colleagues, the opportunity to be in an environment where there are no disturbances, the opportunity to have all the amenities in one place will give birth.
That was some very inspiring words from Dr. Annurag Batra. In fact, that is what he rightly said. Co-working is the new way of working. A lot of terminologies coming around: hybrid way of working, decentralized offices, hub and spoke model. A new terminology that I heard is hub, spoke, and edge, where edge is the home, hub is the central office, and spoke are the offices in non-CBD areas. So a lot of interesting topics to discuss. Let me move on to our first session of the day. Let me introduce the topic that we will be discussing for the as the first session, as the first panel. The topic that we are discussing is why co-working is hot property among investors, and why co-working is becoming investors' paradise. So can we have the slide for our first panel members? Fantastic. So that's the eminent panel that we have that will be discussing this very important topic, why co-working is hot property among investors. Let me first of all introduce the moderator of the session, Ramita Arora, Managing Director, Bengaluru, Cushman and Wakefield. Ramita has been driving Bengaluru's transactions business, focusing on assisting Indian and global companies with the formulation and execution of real estate strategies, client management, and transaction management. Ramita has over 17 plus years of experience in the real estate industry, delivering over 25 million square feet of assets. So thank you, Ramita, for being here with us and chairing this very important session. Let me introduce our speakers of the day in an alphabetical order. We have with us Mr. Amit Ramani, founder and CEO of Awfis. He has passion to create inspirational space solutions, and with that passion, Amit Ramani founded Awfis in April 2015, which has now grown to have centers across 11 cities in India. Awfis has evolved from being just a co-working network to a fully tech-enabled workspace solutions platform offering flex workspaces, enterprise workspace solutions, design and build solution, integrated facility management, and remote working solutions and work from home solutions. So that's a great bunch of solutions that we are now getting from Awfis. Mr. Amit Ramani, very warm welcome to you. I now welcome our next speaker of the session, Mr. Sambhav Mehrotra, who is a co-founder, Startup Movers Pvt Limited. Sambhav has been working with the startup ecosystem for the last 10 years, and he specializes in setting up the financial and legal structure of a startup. Besides managing over 100 startups on a retainership model across various domains, he is also a seed strategic investor in few of them. So the right person from whom we can get perspective on the investments and where the startups are now in this particular space. We also have with us as our next speaker, Mr. Gagan Randev. He is the National Director, Capital Markets and Investment Services, Colliers International India. Gagan brings over 25 years of experience across the real estate and financial services industries. He has experience in banking, insurance, and real estate, including structuring of complex investor exits, fundraising, and asset sales. His experience ranges from banks and companies, including Citibank, ANZ Greenways, Tata AIG Life Insurance, ABN AMRO Bank, Religare, and BPTP Limited. A very eminent speaker and veteran of the industry we have with us. Our next speaker, Ms. Monika Misra, founder and general manager, iKeva. Monica brings over 19 years of experience in hospitality and real estate industry. And in fact, before founding iKeva, she was part of the senior management team at Servcorp, which we all know is a premium service office provider. And she was an integral part of setting up and growing their business units in India. So again, a very experienced industry expert that we have in this session. I invite our next eminent panelist, Mr. Paras Arora, co-founder and CEO, Qdesq. Paras has a diverse set of experience that covers real estate and asset management, investment, digital marketing, and flex space know-how. He provides strategic direction to the group and helps reach their goal in the fast-paced, constantly evolving flex real estate market. And in fact, Paras has the overview of the entire segment, how co-working players are doing and how this is happening. So, Paras, we look forward to some very valuable views from you. Our final panel member, we have young and dynamic Yash Shah. He's the founder and CEO of the Address, and he's also the director of True Value Group. He's a dynamic entrepreneur who's leading the company with his rich experience in the field of leasing and real estate. And his child, the Address, is a co-working space venture under the True Value Group. He's trying to inculcate a culture which fosters collaboration to boost innovation and productivity. Let us look forward to this segment, the co-working segment, innovation and collaboration. So thanks, Yash, for being here with us. Thanks all the speakers for being here with us. Ramita, I now hand it over to you, the eminent panelist, and over the conversation.
Thanks, Sapna. Thank you so much. And welcome to my fellow panelists to this wonderful afternoon. I think we've got some exciting inputs that we are looking forward to receiving from you. And look forward to contributing to this session. So before we really get on to a discussion on the topic, I just thought I'll just take just like a minute or so just to give what we have been seeing in the co-working or the flex industry and see how that is evolving in the country, and then probably maybe having a better clarity on understanding from an industry perspective. So over the past 5 years that we have seen, co-working has evolved considerably in the country. Also with the disruption that we have seen from COVID, there is a lot of evolution that has happened in the industry itself. The operating models have changed to maximize the potential of this asset class as far as real estate is concerned. Co-working, as most of the people use the term, it's no longer the term that evolved when it started. It was more to do with sitting together, working together without any bounds. But I think where it has evolved, it has become a flex industry more so today than just being limited to the co-working segment. And globally as well, we have now defined it as flex industry rather than just calling it the co-working segment. Over the last 2-3 years that we have seen, occupiers especially are strategizing to figure out how they can make co-working or flex spaces an integral part of their portfolio. So a certain percentage of their real estate needs are being addressed by flex spaces. And to respond to this, we have seen a lot of operators who have actually stepped up and evolved the model from the traditional co-working to a flex managed or enterprise solution, as we are calling it in today's parlance. Just to give you a few statistics, globally, as per the data from Cushman Wakefield, we see that about 125 million square feet is under flex operation globally. out of which about 27 million square feet is within India. These were the numbers at least at the end of 2019. In 2020, we did see the business model evolving, and we saw about 4 million square feet being added to the 27 million square feet that we had in India previously. As I mentioned earlier, COVID situation has really given an impetus to the flex model. More and more inquiries, like was being mentioned previously, hub and spoke models, decentralization, neighborhood offices, all of these are coming into play and giving flex offices a different view and increased acceptance in the market. And because of the focus that we are seeing, there is a lot of interest that is coming in from investors as well, be it investors investing into the flex operations, or we also have certain of the funds, certain of the investment houses looking at their own flex brands that are also being talked about. Given that where we stand today, I think today's topic is of immense relevance, looking at it from all the aspects that we would have, both from the investor side as well as the co-working or the flex operator side. So I think thank you for this panel to give us these thoughts from their side as well. With this, I would like to begin the discussion and just to open up the panel of why investors are making a beeline towards this new asset class. Starting up, I think my first question to you, Amit, would be, has there been any changes in the operating or the business model post-COVID that you as an organization are offering or you are seeing in the industry?
So thanks, Ramita. Glad to be here, and thank you, Realty Plus, for inviting me over. Ramita, obviously, it's a very transitionary time, right? I mean, all the models are being tested, be it hybrid models, be it managed space models, etc. As we see it, clearly from our standpoint, I think there are 2-3 things that we firmly believe, and then clearly this is the direction we are headed to, which I can't say is for rest of the industry. I can't speak on their behalf, but one, we diversified from purely a co-working player to a more of a diversified player that had a complete workspace as a platform offering. So to that end, obviously, we have our co-working business, which continues with 70 locations, 40,000 odd seats across 11 cities. In that mix also is our enterprise, or what we call as Office Enterprise, which is a managed office solution, which continues to grow as we are seeing a lot of movement from even the larger multinationals now into Flex. Second, we diversified the offering by adding integrated facility management under our Office Care brand. We now offer office work from home solutions under Office at Home, which is done fairly well as well. And then the couple of other points that we have added, services that we have added, is our Office Transform, which is essentially helping companies transform in these challenging times from a one location model into a distributed network model. And then finally, Powered By, which is our offering to help companies that are trying to set up their co-working office in terms of managing and running those current operations for them. And then, so those are the new offerings. And I think we have always firmly believed in it's a supply side story. It's not a demand side story only. And to that end, our managed aggregation model, which has worked really well, we are now expanding that extremely aggressively as we see that the demand is going to increase. We will continue to extend our supply and probably double it this year. So very, very bullish for this year, and all the offerings plus the supply strategy is what we are positioning for the future. Overall, I think lots of positive news for the industry as all of the operators are doing fairly well.
Thanks, Amit. I think your views, and that's what we see from a occupier demand as well. Extending the same question to you, Yash, is there any changes that you're seeing? And I think the other piece that I would like to ask you is there any change in your model from the co-working model to the enterprise solution that we are hearing more and more of?
Absolutely. I think that there are changes in the entire industry, and I think there are changes on multiple levels. But to start with, I think that quite a lot of companies, not just Indian companies, but even multinational now, have first of all started to mitigate their risk and have tried to become quite a lot risk averse. So because of that, I think that the models which they used to really work on, which was taking a commercial office space and leasing it long term, has now no longer the key. I was actually talking to the Cushman guys as well as the Knight Frank guys, and they were saying that the only thing now which is working is the managed office space, and which is now the new name for co-working, which everybody likes to bring in ever since I think June 2020, after the market has opened up. So adding to what Amit said, I think the market is definitely very bullish, but the way to move forward is that the retail clients that all of us had, or the leads that all of us were getting from for roughly 10 to 15 people, 15 to 20 people, have somewhere diminished, but the leads which are coming in is roughly 1 to 5 people, or something which is going to go up to 40 plus seats. The in between has vanished somewhere, but it's either like the smaller segment which is coming down, or it is basically changing to the managed office space concept, or the enterprise solution, which we now deem it as. Especially, I think what we really focused on recently is that we always used to work on a 50-50 model. So 50% was enterprise solutions and 50% was our retail model. And out of the 50% which was our retail model, we've successfully converted 25% of that into a managed office space going forward. So that has really benefited us and helped us. Ever since lockdown, we have been able to grow the company, I think, almost by 75%. We've added roughly 40,000 square feet over the last 5 months.
Thanks, Yash. Monica, have you seen the industry evolve differently, and what are the steps that you are taking to match up with the changing demand?
Hi all.
I'm so sorry.
Hi Ramita. So the reason we called the flex industry is we have to be agile the most, and if we don't change our business models ahead of time and manage and change and are more agile than what a customer needs in future, then we should no longer be called the flex industry. And I think kudos to everybody, not just in the panel but in the industry. They've been extremely adept in terms of changing their business models. So there is always a factor of demand that you see today and demand that you forecast for future. Yes, there is more and more conversation, and there is more presence of managed offices, enterprise models, which has become de facto for most co-working and flex office providers, and we are no different when it comes to also, Ramita, the reason the conversations are more is because just the quantum of transaction that happens, or the volume of transactions, the volume of take-up that happens. I mean, it's not easy to absorb another 3 million square foot just on retail customers. You have to have the enterprise clients, and that's what it takes. However, even within the enterprise clients, something that Amit said and you said as well, there is a need for the diversification of workspace. They work from different places. They have access to different locations. So the contracts, other than looking at managed or enterprise models, the contracts are also now how flexible can the provider be when it comes to across cities, within the city, across locations. Are those options available? Even though, I mean, typically in enterprise models, I mean, the customers would come up and end up giving longer lock-ins, but the lock-in now for them is with a provider rather than a building. So these are certain things that change. So when people end up committing for a 3 or a 5 year term, they're looking at committing to a provider, and tomorrow we become their partner in growth, which could be another building in future too. So these are certain things that are happening. Yes, the percentage of managed office or enterprise has grown drastically. I don't see retail customers disappearing completely. In fact, they decide faster, we onboard them faster, that churn continues to happen, and they're still the most profitable segment. So I won't say they disappeared in terms of retail, but definitely the percentage has increased.
Thanks, Monica. In fact, just to add to what you just mentioned, in the 3 years that we've been working closely with the flex industry, the models that we have been working on have evolved considerably. And thanks to you and your teams that we've been able to customize solution for our clients. Paras, I would pose my next question to you. What are the benefits that this industry is bringing to the occupiers? Is it limited to just the capital not being provided, or being closer to employees and providing the solutions as neighborhood offices, or is there something beyond that you are seeing as well? And excuse me, my related question to this is, will these drivers remain relevant as we move forward, especially how we saw the drivers changing post the pandemic?
Thanks, Ramita. First of all, great to be here. Thanks to organizers and the fellow panelists. I think, the first part of the question is very nicely covered by Amit and Monica and Yash, and to some extent by you as well in your intro. You mentioned about capex, and you mentioned about near home or on-demand locations. Well, I feel these are the success or byproducts when you go flex. In India, term became very famous. A lot of glamorization around the term. But overall, the global theme is that these are flexible offices, and flexible offices are something which is very proven plug and play, which have two forms. One is a private managed office, bespoke service, and the second is co-working or shared offices. And I think our country has done well in both accounts, and that way, the first 5 years, thanks to amazing operators which we have on the panel as well, and the international chains which have entered the market. So as a country, as an ecosystem, we can offer, anything and everyone to an occupier. The biggest kick here for an occupier is, the fact that it is flexible. So when we say flexible, all aspects of the transaction and the occupancy is flexible. The entry to the space, acquisition, pricing, supply spectrum, exit, these all are, the wraps which the flexible workspace is. And also the change in narrative, office space is no more a real estate or a infrastructure. It is a service now. That's exactly what flexible offices provide. And service always have an element of being on demand. So, post-COVID now, all these things will get more important. They will be in limelight. In fact, COVID has given expressway to this ecosystem. So, everyone talks of, one third, which is, people say the one office strategy where everyone used to come to that office. That's in for disruption. So that 100,000 square feet can become now the vault or the corporate office with probably 1/3 of the footprint, and then it is supported by multiple spokes, which would be satisfied through multi-city or multiple location co-working spaces, and the final work from anywhere model, remote working, which is intense flex or a hyper flex, or a hybrid model, which a lot of firms are saying that you have some people coming to office and some people not working from home but working near home. So this is where we see, and we all have enough case studies, including we on the marketplace or the platform side and the operator side, all have these case studies in all these three spectrums.
Thanks, Paras. So I think there was a lot of talk when the pandemic started that there were a lot of exits that happened, and predominantly focused on the startup community, where we saw that since it was work from home, offices were closed, a lot of startups started withdrawing from these kind of co-working solutions. So my question to you, Sambhav, since you work with a lot of startups, where do you see this evolving from the startup community perspective? How is this going to evolve over the next coming months and years?
Yeah, thanks, Ramita, and thanks for having us amongst this eminent speaker panel as well. So it's been a nostalgic journey for the past 7 years. When you talk about co-working, in one sentence I picked up, Ramita, when you were giving the initial talk, was evolving of co-working into a flex industry, right? Because co-working as such is about collaboration. It's about bringing together a lot of people and from diverse backgrounds. That's where the co-working started. We started from co-working back in 2014, where our first set of clients was also from that co-working space. So we've seen the beta market evolving there. We've seen the collaboration happening. We found our co-founder from that space, right? Now for startups, these are the things that matter. That's what has brought our startup to co-working industry. Uh, Pandemic struck, and now it's about survive today, fight tomorrow, both for startups and for co-working space providers. And primarily, since I've worked with co-working space on the finance front as well, I think startup as a pie of the whole co-working industry is not that great since beginning. And if you talk about shareholders value increasing for co-working space providers, I don't foresee the state share of startups still being that high. So startups are willing to come back, as I said, right? They need that space, collaborative space to work in that market. But right now they are bootstrapping, right? Their investors, even the well-funded startups have been given instruction by investors to bootstrap, take their runway to 2 years. And we've seen startups coming, big startups, 20, 30 seaters coming out of co-working and working from home. They are willing and they are looking forward to coming back, which we foresee in the second half of 2021 is when we feel the startup ecosystem will also start coming back. Gradually, it is happening, but I think it's going to be more from the co-working industry as well, of whether the focus will be on getting the enterprise customers, retaining the value, sustaining the growth, or there would be those collaborative efforts also from the co-working industry of creating that environment where startups will feel to come back. Because let's talk about a 30-40,000 square feet space with just 3 companies, 300 seaters. For a startups, that space itself, even if it is near their home or they are bootstrapping, they might not be interested to go. But for a startup, there's a co-working with about say 50 companies from diverse backgrounds and industry experts amongst them, right? That is the impetus which always had startups coming to co-working. Uh, Second thing I'm again stressing on is the magic of collaboration that we have seen in the 7 years so far. And that collaboration can only exist when you have diverse, like Paras rightly said, right? There are two segments now. One is co-working and one is the flex spaces. So typically the growth path or if I talk about the investor interest, it's going to be more towards this flex space other than pure co-working. Because pure co-working itself has not been that a high value model until you bring in the enterprise into it. So we feel that startups are going to be a part of co-working as long as collaboration is sustained. Possibly in the next 6 months, we'll gradually see the traction coming back. We have closed our both offices, Startup Movers, and we took seats in co-working. That just happened in the last month. So that's a pure indication of where we are heading right now.
Sorry, I was on mute. So I said that's an interesting insight, and I think that's what we've been seeing across the board as well. Actually, that brings me to Gagan. Gagan, now, what is really attracting investors to this asset class, and where do we see the funding situation going forward?
Okay, so I probably seem to be the least qualified to speak on this panel. Given the fact that people like Amit, etc., on the panel, but let me try to give you a perspective. See, unlike your typically the other asset classes that you have, take it commercial, take retail, take residential, etc. You did not have a single investor or single class of investor you could have said who really made a difference in the co-working space. So possibly, again, as I said, Amit's the most qualified to talk on this, given the varied amount of funding that he's received. But the fact of the matter is, you've seen a splattering of investments of people like Keppel, Chris Capital, Sequoia, a couple of other guys, BlackRock investing, etc. But you haven't had somebody seriously coming. Yes, you've had two recent large transactions, Oyo acquiring Innovate, which was a 200 crore plus transaction, and of course Brookfield's acquisition of CoWorks. So honestly, the industry and funding in the industry is at a pretty nascent stage. There haven't been too many sizable exits to talk about, so you can't talk about that somebody made a 2x return or a 3x return or a 0.8x return. I think that is still being evolved. I think the question is, how is the industry going to evolve going forward? So as I look at it, there are going to be two pools of investors. You're probably going to have the institutional investors who are going to be around. People like Warburg, people like Qdesq and Sequoia were already there. You could have a few others. I don't know whether Brookfield would want to chew on more what you call looking at strategic investments. Probably they look at platforms more. But that is going to be one class of investors who are going to be ready to look at scale. I don't think they will be wanting to write out a $5 billion check or so. They would be wanting to write down bigger checks, and they would go for scale. And I think the model they would prefer is a model which would be more oriented towards the typical co-working. Because for me, managed workspaces means something which will give you a 15 to 20% kind of operating margin. If I was a company and I was wanting somebody to manage that for me, I would not let that person take a 30% operating margin. So there would be limitations. But for the second class of investors, who I think have had a great time over the last 6 months, 9 months, making money on equities, making money on other asset classes, wherever you put in money, you got it, who are now going to look at, okay, it's time to take off money from some of those easy asset classes and get my money working for me. And the idea is, depending on the player and depending on the check sizes that you would be looking at, possibly be returns content with returns of 11, 12, 13% kind of stuff, check sizes ranging from anywhere from 1 crore to 10 crores. Typically, that would be the typical ticket size. We have seen certain family offices, etc., active in the space, but I think it's going to take a little more effort on top, in terms of the industry, creating, trying to educate people on what are the risk systems they have in place, how flexible is flexibility all about, and I can tell you that if you asked me 6 months back, I would not have seen us rebounding as fast as we have seen in the last 6 months. So somebody told me that, Gagan, sitting in June, you predict that India is going to be sitting at those 10,000 COVID cases, and I would say somebody's smoking a lot of pot at that point of time. But that is how we evolve. So very difficult to forecast, but that is why you have the experts here, because I presume that they're going to be thinking ahead and thinking out how the industry is going to be evolving in the next 6 months.
Thanks, Gagan. And Amit, since it's been mentioned multiple times that you are the most qualified to look at it from the investor angle as well and give us some insights. Since you've received so many rounds of funding, what are the opportunities that you see where it comes to the funding for the co-working industry? And secondly, do you think that there is any industry status or anything of that nature that needs to be worked towards this, given that to attract more funding?
So Ramita, I don't know if I'm qualified, because while you're raising funds, you can't put yourselves in the investor's shoes. Obviously, we put ourselves in the founder's shoes to do that. So I think clearly from a co-working standpoint, I think this is one of the demonetization moments which has happened for the co-working industry, and as it happened for the fintech industry at that stage, the same situation is happening to the co-working industry. So clearly, the estimates are that this will grow from the current X to at least 2X, 3X, various reports, including yours organization has published, right? So when the market opportunity becomes large, then clearly capital will chase that growth, right? I think so. I truly believe that with the liquidity across the globe, with the industry becoming 2X, 3X, I think capital will be available for formidable players to raise capital and obviously deploy that capital for growth and give returns to the investors. But I think there is also a reality check on investors, especially institutional investors, will chase the large players, right? I mean, clearly, I think the things that will work really well is obviously if you have scale. Second, obviously the team and the ability to execute, because in this co-working idea has very limited value anymore, right? And everybody has tested out the models. It's about execution and scaling up. So I think the team and the ability to execute becomes extremely important. And third and most important is the governance. Real estate by itself comes with a lot of opaqueness to the system. And if anybody who's serious about raising capital, I think governance will be at the top of the agenda for all institutional investors. So that's how I see it shaping up in the next year. But I think 2021, anybody who wants to raise capital, I think clearly will be able to. But I think a lot of smaller players will have a lot of challenge. To Gagan's earlier point on family offices take a different punt, right? I think they are happy with returns in the range of 10, 12%, etc. And those smaller family offices will continue to fund either through fit outs and a committed return, or funding a few 2 or 3 locations for smaller operators. I just think that capital will certainly continue to play a role. But I think for the larger players, the opportunity has become larger. For the mid-sized players, I think it'll be a bit tough to raise fund in the current environment.
Thanks, Amit. And given that you're saying it's going to be difficult to raise funds, so what is the opportunity? And this is a question that I'm opening to the panel. What is the opportunity that we see for the mid-sized players, and is there consolidation on the cards for this industry? Any comments, Amit, you or Paras, if you would like to comment on that?
I'll just make a simple point. I was just on a call with one of the largest consulting companies before this, and most mid-sized operators are in the market to consolidate.
I mean, and the reason for posing that question, Amit, very honestly, was that we've been also hearing a lot that is being discussed in the market as to where this consolidation or where this industry is headed. So, I mean, taking views from this panel would be interesting to note where you see the industry moving. So that would actually add to the focus that are happening in the market, if I want to use this word. So, posing this question to you, Yash, given that based on the calls that we have seen, there is a lot of expectation in terms of, at one side, there is an expectation from a yield perspective and a return perspective on the investor side. But then on the client side, there is always a expectation on economical feasibility, cost optimization, and all that. So given the two parameters, where do you see the industry responding to it? What are the challenges that are being faced? There are challenges of centers shutting down, underperformance? What is the industry looking at turning them around?
So I think I really like it how Amit put it, saying that this is the demonetization of co-working spaces, and co-working spaces have probably seen the bottom over the lockdown period and post the starting of that. As to what I think Sambhav said, that people are expecting quite a lot of co-working. But currently, the co-working, for quite a lot of co-working players, it's come down to this stage where they have to accept whatever is coming their way. So in that particular scenario, the managed office space or whatever is working out in the right direction for quite a lot of players, they're just going to take it. They're just going to take and accept whatever is really coming their way. Now, as far as I think your question is concerned, yes, there are a few centers that have shut down, but I think that is also quite the major reason behind that is a lot of over trading. When the market was looking extremely bullish, nobody really expected that something of this sort is really going to come up. Now, at the same time, if you really look at the perspective of the investors, the centers which have over traded were quite literally all funded. There has not been a single mid-sized player, I would like to say, that, or a small size or a mid-sized player that I would like to say has shut down. I'm sure they might be open for consolidation, the reason being that they're currently not performing well. But the people that have overtraded or the people that have been excessively funded have faced challenges, the reason being that now they have nowhere to go. the investors, I mean, we're talking here about 12% returns. I mean, sure. But the industry has not even, I think, been able to achieve 6% returns if you look at their books for 2020. So that is not a positive sign for anybody as far as the last year books, are concerned. But yeah, I mean, the centers shutting down are probably a sign of the over trading that has happened. But in terms of future, yes, I think that the people that have made their business model sustainable and I think have the power to hold for good 6 to 12 months in times of adversity are the people that are going to stand strong. And I think that is a basic part of a normal business strategy which an entrepreneur puts into perspective at the time of their business strategy or business, when they have to start. So I think as far as the future is concerned, the people that can stand strong for at least a quarter more are going to survive. But if not, then you're going to see quite a lot of consolidations, regardless of people trying to shut down or not. They're going to be just acquired or they're just going to shut down. There's no in between for any of them.
Ramita, if you don't mind, if I can also add a point here. I think a couple of the panelists talked about the quality of management. And I think that is going to be paramount going forward. And I'll give you a small example. This business is all about being flexible, etc. But you need to think through also flexibility. So the big thing currently everybody is on is managed workspaces. So I was speaking to somebody who's got a managed workspaces center, and they are doing this extensive capex for a company who has signed on a 3-year lock-in. And I said, let's assume things are bouncing back a year down the road. They decide to vacate. So you spent all this capex thinking this 50,000 square feet is going to be taken up by this one company. Now tomorrow he says, no, it's okay. 1 year later, I will be happy to give it to 3 different clients. Now you have conceived and created a workspace for one company for 50,000 square feet, and you feel it's not going to be challenged. 1 year later, somebody breaks the lease, goes away, and then you're going to be converting it into 3. Now, honestly, I am not an investor, but I am consulting. If I was an investor hearing stories like that, which door I would exit from. And unfortunately, too much of this industry is caught up with spotted, promoters who think, this is the next great place to be in, who don't think through their models carefully. And I think that is where the differentiation is going to be in the next couple of years. The people who have the track record, ability, the leadership capability, who think through risk scenarios in detail, they are the ones who are going to get the money.
So, Ramita,
yes,
input to add to what you said in terms of what are the next steps, what are smaller or mid players looking at? We ourselves are a mid-sized player. So are business metrics making sense? Are things shutting down? So Ramita, it's always a part and parcel of business, and any business that you assess which portion of your business is making sense for short term and long term, and what is the right time to cut that limb out. I mean, if you are a startup or you're in the growth stage and you will continue to hold to product centers, locations that don't make sense, I mean, it's just bad management decision. So you exit the way investors exit at the right time when a startup doesn't make sense. You exit out of certain aspects of a portfolio when it doesn't make sense. And of course, if it is untenable and you have to exit, which we've seen the number of centers that have closed across the world in the last 9 months of different brands. It's not just the smaller one, even the largest of the largest have shut down centers, and it made sense, and they did it, and it's right for the business. Whether there will be consolidation or whether some another mid-level player will evolve as a larger player, I've always seen this industry as at least 5 to 6 large players. Currently, there are 2, 3. I'm sure there will be a few others that will evolve for sure. And consolidation is sometimes a very natural way of ensuring that another large player evolves when an industry is as nascent as ours. And Gagan, just to add, I mean, today while you have a management team sitting and discussing what next and what does future hold, people are still evolving and seeing what, where, how. This is the first cycle a lot of people have gone through to see a larger recession from a very long bull run, not just this industry. So people are reinventing their models in every possible way. What existed in this industry, especially every 10, 12 months, 3 years, is literally changing the face of it.
Yeah, right.
And I think that is why we
I
call
would
it.
take your point and Gagan. Sorry.
Ramita, if you allow, I just wanted to. Can you hear me, Ramita? Hello.
Yes, please go ahead.
I just wanted to add
Please go ahead.
a couple of points. Yeah, can you hear me? I just wanted to add a couple of points. Going to the broad theme of this topic, which is on the investments and funding. The traction and the exact quantum is difficult to mention here, but it has been spotty. There have been a couple of cases even in the last 8-10 months. Having said that, when the trends and patterns are in favor, like Amit mentioned, and this was seconded by other panelists, that it is the demonetization or the turning point. I think in terms of consolidation, yes and no. If we give the numbers of our platform, in last 10 months, we had 45 centers shut down and 265 new centers onboarded. And the most beautiful part has been that there have been new players in Western region, Mumbai, Pune. New brands have emerged, and they have now emerged after a lot of learning. I do also agree that more and more love and romance for enterprise, back-to-back deals and managed offices. But having said that, people who have made brand as a co-working, AWFIS and Office, Amit is there, they're stuck to the whole, hybrid nature, that they are a brand as well as they will do focus on enterprise. I think you'll find more and more of these, especially with the larger players. And in terms of, the pan-India footprint, now we have around 3,000 plus centers. The branded ones are around, 350 centers. So rest of them are, well thought of micro market champions. What is missing right now in terms of the operators supply spectrum? People focus on the first moment of truth, which is the location and the price, and to some extent with some people design. I think the second moment of truth is that what is my promise? Post occupancy, post transaction. So the promise in terms of services, housekeeping, security, compliances, and people should now focus on rather than growth, enhancing the efficiencies in the center, occupancy experience. So I think a lot of people are doing it. It's good to see that industry ecosystem is evolving. There are now discussions, even payouts on the expansions and the renewal and retention. So I think there are a lot of trigger points which are in favor. First, on the transaction and the growth. Second is ensuring that it is long lasting and sustainable. So I'm not going to be very vocal about consolidation. Yes, again, like funding, it would be spotty. Some cases here and there, but overall, for a lot of people, they have agreed and they have come to realization that it is not that every outfit has to be funded like a startup. It could be a lifestyle business, it could be family office driven, it could be a JV franchise in some regions. In this last statement, I have pretty salute to the tier 2, tier 3 operators. Luckily, COVID didn't impact them much. They had good enterprises as well. So they have grown. New people have entered, and the big ones are getting bigger. So overall, it's a good story.
No, I absolutely agree with you, Paras, because I'm just giving you an anecdote. We were recently doing a search for a client, and in a particular area we found 70 operators who were able to provide solutions. So and it was a decent sized requirement of about 500 seats, so it's not a small one. So that's actually an encouraging story. Like you mentioned, there are some neighborhood champions, and then there are some national brands and some international brands. So I guess overall there is a lot that is available to the end user to choose from, and a lot of factors like the services that you mentioned, the quality of services comes up. And to Gagan, your point, I think one of the key criteria for selection that kept coming from the occupier side was the management, because they've realized that those one-man shows probably are not the right solutions for them, because they need longevity, they need quality of service to sustain from what you were saying. So absolutely take all your points on that. Sambhav, just from your perspective, and this is going to be, going by what we've just been discussing, and we've seen certain new players coming into. So what would be your advice to any startup that's probably looking at entering this industry? What would be your advice? Just curious to know.
Well, this industry has been one closest to the heart from beginning. I'll tell you the reasons for that. One
Sambhav?
is, yeah.
Hello?
Can you hear me? Yes.
Yeah, we can.
So if you look at the market size, right? In 2014, it was about 3% of the overall market that was in co-working or flex space, which till 2020 is still about 18 to 20%. So there's a lot of market share still left to be converted, right? So in terms of market share, there are no entry barriers for new players to come in. I'll just go back to the previous point and connect the dots of how it has to sustain. No co-working now can sustain without the unit economics working, right? We've seen, so as a part of 91 Springboard thing, the best learning curve for us was getting to cash positive. And the 3 lessons that came out was keeping it asset light, ensuring that your unit economics work. And you just cannot have spaces which burning money just on the terms of brand building, right? So for any new person coming in, it should not be the limelight or the glamour of the co-working and the market size that's available. I think it's got to do with keeping it asset light, looking at other models, because it has been asset heavy for long and investors are not too much oriented to invest in those. Second, doing the right unit economics and financial metrics before plunging into and giving that kind of a commitment. And of course, third is it's now going to be a decentralized market is what I feel. That's a personal thing, where tier 2, tier 3 cities hold the growth. Multiple centers nearby to the homes of people versus they're traveling. I think that's where more traction will come in rather than the bigger centers of 20, 30,000 square feet. So in terms of startups, I feel multiple centers, each promising on the unit economics front. If people entering that domain, there's a lot of bigger pie to be taken.
Great, thanks, Sambhav. Gagan, question to you. Your advice to clients, what are the 3 things that they should look at from an investment point of view if they are looking at investing in this industry?
So I think one clearly, which is true of anything, is the management, which is the quality of people. Second, I think everybody is now looking at the path to profitability. How quickly are you going to start making money? So those days of, okay, I'm putting in money, 3 years down the road, we'll fund a series 2, etc. I think those are gone. I think people would want to see the path of making money. Third would be the model. What is the optimum space? So if your business is going to be relying on, primarily if I'm going to be funding myself with investors, etc., I can have a model which is 85%, 90% managed workspaces, etc. It can cater to that. But if I'm looking after an equity investor who's looking at 2-3x money, 100% model of managed workspaces, I think that is going to be very difficult to give exits to. The third challenge, I think, so I think these are the critical ones, but there is another point which I wanted to make as to what the industry has to be wary of. I think what has happened is, and this is not only true of co-working, but this is also true of some of the allied new businesses, which is co-living and student housing, etc. You had a proliferation of players who actually made the developers, landlords, etc., spend a lot of capex because they wanted to do joint venture deals. And when things started going south, people exited without ordering any commitments. This holds true of hundreds of players across the space, which makes a lot of people wary. So, I'm sure Amit and Yash and a couple of others would not be facing this problem. But if I would go there and say I've got a great co-working story, a lot of developers are going to say that I am going to want a premium from you because my past track record with some of the players in this industry hasn't been too great. So I think that is also the challenge that people are going to face going forward, which is again the question that apart from a couple of niche players who have the flexibility of capital backing them, it is ultimately going to be, or at least I believe it is going to be a situation where possibly the big are going to get bigger and they are going to be the ones who are going to be able to get more capital easily. And, as Paras said, I think capital availability of capital is going to be a little patchy in this industry.
Thanks for your views, Gagan. I think we're just about approaching the last 5 minutes of the session. I just wanted to check if there were any questions that anyone had that we have received. Otherwise, I will open for just last closing comments from the panelists today. So I'm not sure if there are any questions, but any closing remarks, Amit, from your side that we would look at? Sapna, any questions that we have, Sapna?
Yes, we do have some questions, but probably we can have the last comments from all our panel members first and the summary of what we just discussed, and then we'll take the questions.
Sure.
So, Ramita, extremely sorry.
Last comment.
Sure. So, Ramita, extremely bullish
Please go ahead.
on the So, Ramita, extremely bullish on the industry. I think 2021 is going to be a defining year for co-working. So, I think clearly there is a lot of debate on managed versus hybrid, etc. I think those models will play out on its own. I think some bit of consolidation, either by shutting down or true consolidation of M&A might end up happening. But overall, I think it's a very, very positive sentiment. Enterprises are back. Our occupancies are doing fairly good right now, physical occupancies. And I foresee that, I think 2021 will, create a landmark opportunities for co-working.
Great. Thanks. Thank you. Paras, your thoughts?
Well, I totally agree with Amit. Like we started in 2015, Awfis also started, and they've been inspiring the ecosystem. I think I'm just going to mimic what he said. It's the golden time which is coming for this industry. This will mature. Like I said, COVID has given an expressway. The importance of attaching office space with your business growth and business performance, that's where flex offices comes in. And I think we have already covered on the funding and the consolidation. I think anyone and everyone who can focus on giving a great occupancy experience with understandable unit economics should enter the game. We have seen hotels, we have seen landlords, traditional landlords getting into co-working. So I think it's an exciting phase. More the supply, more would be the value for the ecosystem, which in turn will attract more and more demand. So I think spectrum of variety and spectrum of supply, differentiation within the supply, and great occupancy experience. If we all focus on that as an ecosystem, I think this will no longer be a subset of CRE, would be a parallel or a new, or probably, in Indian context, we are simply bullish that it may be as high as 50-60% of CRE. Because our country is different, we put a lot of importance on the value. So we are extremely excited about this space, and so should all of us be. Thanks. Thanks.
Great. Thank you. Gagan, your thoughts, final thoughts?
Yeah, so according to me, like as much as 2020 was tough for the industry, I think 2021 will see a stellar rebound. And the reason I base this on is, I possibly have a feeling that we are going to bounce back much faster basis what we've seen in the last couple of months. And companies, including a lot of MNCs, are going to be working on, as you would like to describe, a hub and spoke or a flexi model, etc. And they will be ready to, and I personally believe that the industry has about 6 to 12 months where they can actually charge a premium, because people are going to be very ready to pay premiums on efficient housekeeping, cleanliness, everything that, I can tell you by experience and what my fellow employees look for in the office compared to what it was previously. So all those trends are going to be there. People are going to be ready to pay a little bit of premium, which means there is money to be made as long as you run your business model efficiently.
Thank you. Sambhav, over to you.
So I resonate to a lot of thoughts already put forward. This year was more about resilience from co-working players. We were expecting some of them to perish, but of course the valuations have taken a steep dent. But as I said, survive today, fight tomorrow. Thanks to the demographic dividend that this country has, we are looking at the highest growth rate year as given by the World Bank. And I resonate with what Gagan said. This is going to be a stellar year for co-working industry.
Awesome. So, Monica and Yash, your comments?
So, Ramita, this year will definitely show for this industry extremely good growth and faster growth. Agility is something that's inherent in all our bloodlines, so that's going to be very evident. People are going to take lesser, rasher decisions of random growth, which doesn't make sense for unit metrics. I'm hoping that's at least a lesson most people have learned. We had an experience when one of the larger players was going to IPO last year, and then we had COVID. So I'm hoping rationality is going to set into a lot of decision making. But what I agree is something that a lot of people forget, that Paras Paras is the only person in the panel who is insisting, which is very real, that we are about service experience. Our entire industry is about service experience, and our members or customers are only going to stay depending on the experience that they will get once that is onboarded. I mean, while you can do all risk metrics, and Gagan, we can present to an investor as to what will we do in case this doesn't work, the only way there is value add in this industry other than CapEx is to give great service. So those are my 2 bits.
Great, thank you. Sapna, I think we are all out of time, but a couple of minutes.
No, we can go ahead. Yes, please go ahead with your last comment.
Yeah, super. I think just adding to what Monica and Gagan had to say is that most of the times I have to tell my staff that, we are actually a hospitality and a service industry over a real estate or a co-working industry, and that is always going to be the truth for each and every person that is walking into any of our premises. As to it can be a competition or anything, but that has always been the core focus for everybody. And I think we've already seen the rock bottom in the last year, and the only way for this industry is up. And I think that's where we're headed. Thank you.
Great, thank you. My 2 bits, I'm just bringing in the occupier perspective.
Yeah.
Yes, Sapna. So I'm just bringing in the occupier.
We have a very positive vibe.
Yes,
we have very positive vibes from the entire panel.
And I want to add to the positive vibe by bringing in the occupier perspective, since we are talking to a lot of occupiers who eventually would end up being some of your clients. There is a very, very positive outlook to this industry. Like I've mentioned in the beginning, my initial comments, a lot of companies are strategizing to convert a certain percentage of their portfolio globally into flex spaces. And the flex does not always have the negative connotation that they would want to downsize and they want flexibility towards that. It is also towards timely addresses of their growth, which they are unable to do within their system. So overall, we are seeing positive outlook, both from the occupier side and with the investors that we have been speaking to. There is a positive outlook. Obviously, this it was being mentioned, it is a nascent industry, so a lot of reviews that are happening, everything is being looked through the magnifying glass. But at the end of the day, 4-5 years down the line, this industry is here to stay. And this is an asset class that we will see more and more of and doing really well. So thank you everyone for your time. Sapna, over to you.
Yeah. In fact, we have got a lot of questions, in fact, but I'm just taking 2 or 3 because of the time constraint that we have. One question that has come to us, Ramita, you are free to assign whoever you feel the speaker can answer. Do tier 2 and 3 cities present the next area of expansion, or is it still too soon? This is one of the questions.
Amit, would you be able to take up this question?
So, Ramita, I think, we have expanded into tier 2 cities. We have a location in Chandigarh. We have now opened a location in Ahmedabad. We are looking at a few other tier 2 cities. So yes, the opportunity is there, right? I mean, for a couple of reasons. One, I think the tier 2 opportunities are getting formalized, right? If you want to access tier 3 rural areas, you do need a setup. And companies in our network and obviously outside our network are looking to expand into tier 2 cities. We clearly see that demand going. Second, I think a lot of people might not ever come back from their tier 2 towns, right, to the main cities, as companies are taking the decision on distributed models. Companies are taking a call that there would be certain employees that will never come back to the tier 1 city. So tier 2 by itself will see some traction from there. But having said that, the reality is 85 to 90% of the opportunity is 7 metros. So even though tier 2 and 3 cities might sound, it's expanding, but I don't think it's going to ever compare, at least in the next 5 years, to the expansion that's going to happen in the 7 metros.
Okay, I think that answers the questions.
Yes, go ahead.
Ramita, you wanted to add something?
Actually, I was going to say that one of the things that probably will also put this into that lower percentage also is that the infrastructure that is available, and I'm talking not from a internet and that infrastructure, not the telecom infrastructure, but the real estate infrastructure in terms of compliant buildings. All of those things again need to evolve in the tier 2 and tier 3 cities, because when you're talking about transparency, we're talking about compliance, you're talking about funding, most of these things, one of the basic criteria for evaluation is compliant buildings, and that is something which I think we need to evolve before addressing co-working in these tier 2, tier 3 cities.
Okay, fantastic. Quite a valid point. Another very interesting question is, one of the viewers has asked, should co-working go for, they are talking about the financial gap. Should co-working companies go for fixed term rent or revenue sharing model with the building owners? Ramita, your call. This is the speaker we should put this question to.
Monika, would you be able to address that query?
So it's always a difficult choice. It's about deciding how do you manage your risks in a business and how much of the hard-earned money you want to share with your landlord. So that's the decision a business takes. But as we grow, I think one of the panelists also mentioned that a lot of developers are coming into this business because they see it as a natural extension. In fact, we've been funded by one of reasonably well-known developers based out of the South. So having a partnership is never bad, as long as you ensure, and again, going back to Gagan's point, people ensured that landlords invested, they were given promises, and some of people exited without promise. Look at doing a deal which makes sense for you in the long run. Don't look at short run. But yeah, I think for us, revenue share makes a lot of sense. Revenue share, profit share, partnership models make a lot of sense.
Yes, you would like to add something?
I wanted to add.
I'm sorry.
Just wanted to add what Monika said. I mean, they have the experience of both the acquisition strategy, which is the rev share, as well as lease models. I mean, I won't be able to give better because we are not in the same, exactly same line of, acquisition for a space. But what we have learned from them is that when it comes to a prime micro market, and you get, you can make out from a micro market competition analysis that what is the occupancy levels, what is the pricing there. We always suggest to operators that do a hybrid approach. If you're confident about partner and it's going to be, a much more long-term sustainable trust, which can span over 3 to 5 years, go for partnership. But overall, fixed rental is a much more stable, and it allows you to give, a range of pricing over the first 6 months, then 6 to 12 months, and stuff like that. So I think all of them have done both the deals, but I think trusting the partner, getting the right partner, JV with the landlord is a fantastic thing to do, because landlords, at the end of the day, they want return on the money. Managing a space is the operator's, ball game. So I think partnering with the landlord, the A grade or even a B grade supply, but a trusted landlord, that would be great. On and off, rev shares are a bit risky. That's why you see a lot of shutdowns after starting 6 months or 12 months, and then suddenly that supply comes again in the market. So I think hybrid model, but just to quantify, if it's A grade micro market, fixed rental would be great because you know that you would be able to get the occupancy, to manage it. And in terms of absorption, occupiers, same time 2 years back, I think in one of the again same event, we were talking about enterprise adoption to flex, which was between 2 to 6%, and now even after COVID, we are talking of enterprise adoption as high as 10 to 14%. So I think fixed rental is way to go for a lot of micro markets, and a trusted partnership here and there is always good. It will bring a lot of vibrancy to the ecosystem.
Okay, that's great. So I think I know our
Yeah. Ramita, 60% of our portfolio is in partnerships with the landlord in rev share or profit share deals. I think it is the model to go forward with. I think, but the reality is landlords are extremely choosy right now, which 6 months, 9 months ago, people were able to crack those deals. Those landlords ain't coming unless you have a proven track record anymore.
Absolutely.
I would agree with you, Amit, and that's what we are seeing as well. So all the proposals that are going for revenue share, their track record is being reviewed very, very closely, especially post-pandemic.
Okay, one last quick question is about the budget. The budget is around the corner, and one of our viewers is asking what kind of tax and other benefits to the co-working players and investors can accelerate the growth of this segment. Amit, you would like to add something to it, and then we can go to Gagan.
So I'm speaking on behalf of the Indian Workspace Association. I'm the vice president. So clearly the association has been lobbying a bit with the government as well. I think clearly one is on the GST. That 18% is something that is very, very challenging for the customers, and so that's what we have requested the government to relook at it. Second, to give real co-working similar to real estate industry infrastructure status, right? Which both of these two things I think will certainly help grow the industry. And third is a small bit, but it's the TDS, right? Most companies that come to us are hesitant to pay that 10% TDS. So those are the three demands that we have requested from the government. Let's see what the budget gives, and fingers crossed.
Gagan, you would like to add something to it?
I honestly can't think of a fourth. So
Sambhav, you can think of something to add. Yeah, Paras has something to add. Yeah.
The whole nuances around GST, like, if that particular workspace in Hyderabad or, Karnataka, then you have to do CGST and CGST, I mean, CNS. Why can't they, give a IGST? I mean, why the imposition of a clause, which is immovable property, actually is a service. So I think that will give lot of benefit to occupiers to get their input tax credit. So I think that nuance around GST can be worked out. That अगर percentage नहीं भी कम कर रहे ये कर ले वही what that. So even a lot of occupiers feel that we are registered here now, we are taking up space in Bangalore, we are not able to get the input. So I think that plus what Amit and everyone is mentioning, that rates are always welcome, reduction in rate.
That's right. That's right. So fingers crossed. Let's see how the budget comes in and what it brings with it. People are looking forward to some big bang announcements in this budget, but let's see. But thank you all for being here with us, Ramita, for your wonderful moderation of the panel and getting the best out of them. Amit, for being here with us, sharing your views, and on behalf of the entire association. Monika, for being here with us. Yash, again, Monika and Yash gave us the perspective of what the co-working players are doing in this segment. Gagan, for your wonderful facts and figures about the transactions and the industry. Sambhav, again, giving us the perspective of how investments is happening, and Paras, for your valuable views on the segment. So thank you to all our speakers for being here with us and sharing their time and expertise.
Thank you. Thank you.
Thank you, Sapna and the Realty Plus team.
Thank you so much.
Thank you.
Thank you.
Thank you.